GB Cycles here with an update on June the 26th. I was not quite sure if I were to make a very short video or a longer one. I guess it will be a longer one. As I said last week, things are a bit complicated now. We have gotten down to a very oversold level that could be a major low. It could even be potentially the bear market low. If we look at the recent bear markets, this is how deep they went. So you can't blame people for looking for a low here and hoping for a soft landing, but I think it will in the end fail and we will get a hard landing, but that's my guess. So yeah, we could anytime start to rally, but I still think it's a bit too early. Here I have my 4-week cycle and the double cycle of 8 weeks, and we had some kind of a disturbance here with this lower low here that was not following the cycle, and that made this next top a bit late, and the disturbance has went on here with a late low, later than expected. So will we now turn down to make a low in sync with the cycle here early July, around July the 6th I think is the most favorable date. It could be a higher low, it could be a lower low, or is something else going on? Okay, let's have a look. This is my pattern recognition made out of this at this point, and I was looking for A, B, C, and we got this A, B, C, only that the B made a lower low. So this low looks too early, and yeah, should not be trusted, but who knows. I still favor more downside here. If you look at here the 3.5 or 7-year cycle, we see the cycle is not bearish anymore on short term, but as I have said earlier, we cannot trust these short-term directions of the cycle. The general direction is down for another 12 months. But this could favor some upwards or sideways action. So we have broken above this trend line. We are meeting a resistance up here. Who knows? If you look at the hourly data, these are my wavelets down here. This is the Dow Jones Industrial. I was looking for a sell setup here around on Friday, but then we got all this momentum suddenly, and I guess it was this inverted head and shoulders that kicked in. So I'm still looking for a swing sell setup here, but if we see more strength on Monday, it looks too strong to be bearish, and I would probably step away from this setup. But weakness on Monday would favor a downswing, and with a 4-week cycle now pointing down, this could yeah, like we have seen earlier here, it could just be a fake here, what we have the Friday rally, and we could go to lower lows. Let's see, I have this one here in orange. I have the 3.5-year moving average, and as we have seen, this was the bear market low in 2019, in 2016, but we didn't quite get down there this time. And I also have to mention this COVID crash was quite unusual and not forecasted by the cycle. It was kind of not supposed to happen. I have mentioned that earlier. Anyway, the cycles are going a bit up here short term, July into August. Could mean we could get a bigger bounce rally towards the 200 MA. But you know, the 200-day moving average, that's up here, 4,200 in some weeks. That's like 8% up here. Yeah, it could happen, but let's look at some other things. This is Norway, and finally we have seen weakness in energy, and finally Norway has broken down, as I was expecting last week. So we are finally getting bearish confirmations in Norway that the top is in. It was a double top, and this should be far from over regarding downside. And I have very strong data or projections or stuff pointing to more downside, and very short time also we should see more downside, and that would correspond with the S&P should turn down again. So I would put it like this maybe. We should have some more downside in Norway, then we could have the summer relief rally and then the crash in the fall. If I look at some other markets, this is the German DAX. It looks to me that, no, I have to mention I haven't analyzed the German market that well, so I don't know how it tends to behave, but a general observation here, we have, this looks a lot like the big relief rally towards the 200 MA, and it failed, it didn't get up there, and now we have crashed down. We have kind of broken the trend line here, making a big bear flag, and just from my feeling here is, yeah, we could make some kind of a small bear flag here, but we should soon turn lower, given that we have a hard landing or a more severe bear market than we are used to. And the FTSE, similarly, I haven't done that much analysis on this market. Here we also have kind of a big double top, almost got down to the previous low, and if my assumption is correct that this is a bad bear market, it would be much too bullish if it start to rally here above the 200-day moving average and towards the top. So this should be a small bear flag, and we should finally probably break below this low from March. So summing up, I see a lot of things pointing to more downside, both on very short term and on the longer term. On the other hand, the US markets are very oversold and at a typical possible bear market low, so anytime we could start to see a bigger rally. And on the other hand, this bigger rally may not materialize at all. The cycle is pointing pretty steep down, towards next summer. There are several potential lows here. It doesn't have to be in July next year. It could be this is also a very typical low. Yeah, just look back in 2016. Here we made a low at this point. So here that would be around, I think, March. This is also a potential bear market low at around November, I think. We don't have to make any huge relief rally here. Things could be so bearish that we just crash down here. So, as I said, things are complicated.